Good morning. This is James of 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Saturday, everybody. This is James. We're back at it again. We have a week of news to cover. Not that big of a deal, to be entirely honest. In fact, the news I thought was going to be a big deal was SoundHound reporting earnings. It pretty much did nothing. I think it went down 5-10%. So buy opportunity, green light, as far as I'm concerned. Not financial advice. Don't forget that part. But a lot of our clients have SoundHound. We're big believers in it, and it's a great company. And NVIDIA thinks so, and so does the other market. It's just so cheaply priced. And the only reason I'm bringing that up is because that was the big news of the week, in my opinion. I was ready for it. I think NVIDIA gives earnings next week. So as far as earnings go, those are the two things we're really watching. And guys, the market did pretty bad this last week. It dropped. Well, I mean, let's just read the news. I'll just jump right into it. Do I have a term of the day? I didn't get a term of the day, guys. You know what? Here is the term of the day. Okay, and it's actually a quote. And I was thinking about this because Warren Buffett is, Berkshire Hathaway. Eventually, he's going to pass because he's very old. And I'm going to have to say Berkshire Hathaway instead of Warren Buffett. And I'm not mentally ready for that transition because Berkshire Hathaway is Warren Buffett. And Warren Buffett is Berkshire Hathaway. But he had a really great quote, Warren Buffett did. And I'm going to tell it to you in a second. But currently, his firm, Berkshire Hathaway, they have an insane amount of cash on hand, and I don't know why. Okay, I can't tell if it's like he's just making a bad play, or if he's trying to individually select the biggest winners in this upcoming bull market, which we think is going to occur. I'm not entirely sure. He's not a big, even though his advice to the regular investor is like 70-80% in the S&P index, he doesn't follow that rule, right? He buys individual equities. That's kind of their whole shtick of the firm. And I think that's what he's waiting for. He's trying to find individual winners to dump money into. And funny enough, he's dumped, we'll get into it. The news talks about it today a little bit, what Berkshire Hathaway is doing. But there is a saying, and this is straight off the dome, okay? So don't be mad at me if I butcher this. But his saying was, someone is in the shade today because someone planted a seed a long time ago. So let me say that again a little differently. So there's a tree today for you to rest under because your ancestor planted a seed and watered it. Okay. Kind of a cheesy quote, but it's so true because you don't see a lot of the work you're doing, right? And I'm thinking of, so like my parents, for example, we've been going to the same church. I mean, they don't live in California with me. They're from Arizona, but we've been going to the same church since I was like in 5th grade. And they still go to it to this day. And the church is now expanding. They're building out property. And in my head, I'm like, well, why, what are you guys doing? You're contributing financially. You're contributing with your time, with your effort, your intention. And my dad gave me that quote in not so many words. He's like, well, somebody gave us the building that we're in right now. Somebody worked hard for that, and they didn't go to one service in that church. And I thought about that, and I was like, oh, wow, you're right. You're giving back to the future generation. The new young people that are going to be going to this church, my parents are going to be partially responsible, and whoever else is helping build that church, get the property, build a building, et cetera, they're all going to be responsible. It's an investment in the future. It's planting a seed that they'll never sit on, planting a seed for a tree that they'll never sit under. And a lot of our investments are like that. Okay. A lot of investments are like that. And if you can look at it like, hey, I'm doing a service. So what would be a good example? You're investing, even SoundHound, we can even use SoundHound. SoundHound is at the forefront of the voice AI space, right? Of voiceal recognition. Is that how you say it? Voiceal? That doesn't sound right. Voice recognition. I'll just say that. And that's probably not going to be a huge deal until 2040 would be my guess. Could be sooner. So I'm trying to plant seeds for people that is many decades later, right? Or a decade and a half, I suppose. And that's planting a seed. You're planting a seed, and it's quite possible you may never sit under that tree's shade, but somebody will, okay? Remember that. Somebody will. Okay, I just ranted. Let's read the news. Stocks fell Friday, putting major indexes in the red for the week as the election-fueled rally that took stocks to a series of record highs has fizzled. The Dow Jones Industrial Average slipped 0.7%, while the S&P and NASDAQ lost 1.3 and 2.2 respectively. All three indexes lost ground this week. The Dow declined 1.2, while the S&P and NASDAQ each recorded their biggest weekly declines since September after shedding 2.1 and 3.2% respectively. Stocks had also closed lower on Thursday after Federal Reserve Jerome Powell said that the Fed is in no hurry to lower interest rates, noting that the path toward the central bank's inflation target is bumpy. Okay, before I keep going, I expected this. I just didn't think it was going to be this week. I kind of thought it was going to be the week after. Okay, I thought it would be like around Thanksgiving. But guys, we passed 6,000. That's insane. Okay, a year and a half ago, we were at like 3,300, or not 3,300, sorry, like 3,800. Okay, and that's a big deal. So a lot of growth this year. And I still think there's another level to this bad boy for this next year. I think the beginning of 2025 is going to be really telling and a big deal, right? Because we won't see any of the tax implications or new cabinets policies until probably 2026. I'm not entirely sure how quickly things can be implemented, but I think 2025 is like a transition year, but it'll still be a good growth. Probably 9-10% is my guess. Anyways, let's keep going. Retail sales data released early Friday came in stronger than expected, which is good news about the economy, but reinforces the idea that the Fed may not be as aggressive as some investors had hoped in cutting its benchmark rate. The yield on 10-year treasuries, which is sensitive to expectations around interest rates, rose as high as 4.5% this morning before retreating about 4.44%. That's great. We love treasuries. Treasuries, guaranteed investment return, but very little yield, right? 4.4%. It's not that great, but it's still guaranteed. And that's a great foundation for someone who likes guarantees. Large cap technology stocks were mostly lower Friday. Amazon and Meta platforms both fell 4%, while AI investor favorite Nvidia and Microsoft lost 3%. Alphabet declined 2% and Apple dropped about 1.5%. Tesla shares rose 3% after slumping nearly 6% yesterday amid reports that President-elect Donald Trump transition team is preparing plans to scrap the $7,500 electric vehicle tax credit. Not a big deal at all. Okay, and if you still think Tesla only makes electric vehicles, you're not investing in the same company that I am. Okay, that company is trying to do tons and tons and tons and tons of things. They're trying to be the trailblazer for the AI robot space. They are not a car company. They are an innovation company. That's my opinion. Among other noteworthy movers, shares of Applied Materials, AMAT, ticker AMAT, tumbled 9% after the semiconductor equipment maker reported weaker than expected earnings, and Disney shares climbed more than 5%, adding to the big gains recorded on Thursday after the entertainment giant reported strong earnings and a rosy outlook. Guys, I have been invested in Disney with client money for 5 years, and they have done horrible. So the fact that they're finally now bumping back up is lovely, beautiful. Initially, we had gotten into them because there were talks that they were going to buy all these other platforms, right? They were going to buy all these platforms, and then they ended up buying Hulu and ESPN, and they're just this whole combination, and it just didn't pan out. It was wild, but Disney's a hold for us. We got a hold. I also just think they're too big to fail. Now, if they keep isolating their target demographic, which is pretty much little kids, and they keep making it political and I don't even know other than political what it would be. But if they keep trying to send a message for whatever purpose that they're trying to send those messages, mainstream America is just not going to invest. They're going to go watch other things. They just will. So hopefully Disney figures that out. I'm really hopeful on that. to be inclusive to everybody. So, and then here is the big news of the day. Let me read this. Domino's Pizza shares gave up early gains following news that Warren Buffett Berkshire Hathaway had taken a stake in the world's largest pizza chain in the third quarter. And shares of swimming pool supplier Pool Corp, POOL, ticker, Pool, held on to some of the boost they got from the news of a Buffett stake as well, rising 0.5%. And then Ulta Beauty, ticker ULTA, shares dropped more than 4% as Berkshire sold nearly all of its stake in the cosmetic chain after entering the position in second quarter. And then let me just mention Bitcoin real quick. So Bitcoin traded above 91,000 after slipping to around 87,000 late yesterday. The cryptocurrency, which hit a high of 93,000 this week, has gained more than 30% since the election amid hopes that a supportive White House and Congress will implement policies that benefit the asset class. Gold futures trickled down below 2,565 an ounce, and it hit a record high of 2,800 last week, but it lost ground since the election. Okay, let's talk about Domino's real quick. Okay, I am, if you know me, pizza's the bee's knees. It's my favorite food. I'm obsessed with it, and I want to go to see real quick what Domino's is. Sorry, I'm pulling up their ticker. Domino's performance. I'm doing it with one hand so I can hold this mic. Okay, no, I want to see the stock. Okay, hold on, guys. But you know I love pizza. And Domino's used to be horrible. Like when I was a kid, if you got Domino's, it was like, ugh, Domino's. Where's Pizza Hut or Papa John's or even Little Caesars at the time? Now, I'm like, Domino's is great. They've changed their recipe. This is, 15 years ago, 20 years ago that they changed their recipe. And they have finally, I think, surpassed, I think they're the number one pizza chain. I mean that. They're trading at $431, which is crazy. Let me look at this all-time year to date. What have they done year to date? They're actually not even, their year to date high is 522. Let's go to their all. Let's see. Oh, wow. They went public in 2004 for $13. Okay. Anyways, back to the Berkshire Hathaway thing. Anytime Berkshire Hathaway, so the way that company works, guys, it's not like me. Okay. It's not a investment firm. It's not an RIA. They're an actual company that just buys and sells stock. So, which I think is beautiful. I would love to do that one day, but you need trillions of dollars really, or billions for that to really work. So all they do is buy and sell companies that they like. Well, they also happen to have the world's best investor in Warren Buffett. So they've done pretty darn good over time. But they don't invest in anybody else's, or they don't have any client money. All the money they have is their own money. And so when they invest, they really do take their time to invest correctly. And even though if you were all in the market right now, and if everything goes to plan, market goes up 20, 30, 40% in the next 4 years, that's great for like an individual person, for an investor. But with a company like Berkshire Hathaway, they want to find winners, right? So when you're invested in the market, you get all 500 companies, okay, the 500 biggest companies. But what they want to do is only pick the ones that are going to go up. So they're very selective, and they chose Domino's. Okay, they sold out of Ulta Beauty, which, I mean, I don't know anything about that business or that. I know Ulta's famous. They're in every mall ever known to man. But there's Sephora, and then there's the online makeup industry, whereas Domino's, I mean, they are kind of like they're the standard, right? I feel like Papa John's has fallen off after they got rid of Papa John, which blows my mind. And Pizza Hut's just they got rid of their buffet for lunch. Pizza Hut, what are you doing? That's shameful, Pizza Hut. So Domino's, really standard. I think they have that 2 for $5.99 deal. The pizza's solid. The cheese bread is great. Their garlic sauce is better than Papa John's. And the reason I'm bringing all of this up is because I think Domino's is a winner. Okay, but I also am a big fan of a lot of these food companies. So Chili's right now, that Middle America chain is, I think, set to explode. And they've actually kind of already exploded this year. But like McDonald's, it's $12 for a Big Mac. And I don't eat Big Macs, but I know that because everybody's complaining about it. But you can go to Chili's right now. You can get unlimited chips and salsa, a drink, a burger, fries, and some soup or something. You can get like 4 or 5 things for $12.99, right? Their 3 for me deal or whatever it is. That is, I mean, that's exploded Chili's stock. I think it's either EAT or YUM. I can't remember which ticker is. Both have done really, really well. Let me look up Chili's stocks. Chili's stock. EAT. EAT is what it is. Let's look at what it's doing. Man, I cannot. That's $118 right now. And year to date, oh my gosh. Year to date, come on, give it to me. Okay, it was $40 January 4th. It was $40. Okay, so it's almost tripled. It is almost tripled. That's pretty darn good. And the reason I'm bringing this up is the second I saw Berkshire Hathaway had invested in Domino's, I knew that my thought process about this middle America chain was probably correct. The Eat and Yum have both done exceptionally well, and people are willing to pay more money to sit down at a Chili's than they will to get a fast food burger from McDonald's quickly, right? The convenience of fast food is wearing out the expense, the cost. It's just not, they're not the same anymore. It's not worth it. And I do kind of like the concept of if things happen with these tariffs, maybe food will be harder to get for these fast food restaurants, and they'll have to completely change up their philosophy. Okay, because it's ridiculous. We used to be able to get 20 nuggets for $5. When I was in high school, we had open campus. I could just leave. We could go to McDonald's. $5 got you 20 nuggets? That's like gold. 20 nuggets now I think is $10. 8 or $10. That's too much, McDonald's. Get it together. Whereas Chili's killing it. 3 for me. Okay, killing it. And that whole middle chain, it's not fast food, but it's not a good restaurant. Like Chili's, well, Chili's is a good restaurant. You guys know what I'm saying. Chili's, Texas Roadhouse, Sizzler, TGI Fridays is going out of business, but Applebee's and Chili's are the 2 big ones. They figured it out, I think. And I'm a big believer of their companies. I don't think I've put any client money into these, but I've been watching them for 6 months because I was like, man, how is Chili's? There's just so many people in this Chili's right now. I went with, we have family friends who love Chili's, and I see why. So we were there with them one day, and I was like, why are all these people here? Okay, and it's the same thing with Domino's. Domino's is the pizza that gets ordered online the most. And again, companies like SoundHound, they work with Papa John's, Domino's, Pizza Hut, Church's Chicken, Chipotle. I'm trying to think of all the ones that Five Guys. Did I already say Five Guys? I don't know if I already said it. But these companies, they're making this change to the AI space, okay? Because there's ways to save money and ways to make money. Okay, I'm done ranting. Anyways, check out ticker EAT, check out ticker YUM, and then also check out Domino's. I mean, I don't know. It's so hard for me to say follow the money because technically the Domino's is not at its all-time high or its yearly high, so it'd still probably be a good investment. Like it has ways to run back up. But following the money is usually really good advice, right? Like the Nancy Pelosi stuff. Well, Nancy Pelosi's trades, they've done 50% this year. Well, obviously Nancy Pelosi has insider information, okay? And she'll never get in trouble for it, which is extremely immoral and wrong. But the idea of, hey, do the same trades that she does, yeah, that's probably fair advice because she has insider information. Now, do I want to follow the money with Domino's Pizza? I do love pizza. I do. I think the answer is yes. I think I would be okay with. So there's different ways of diversification, right? And I'll end here soon. But you can diversify either by like class. So I have, or like class would be like stocks, bonds, treasuries, right? You can allocate differently that way, or you can also get more scrutinized, more specific, and diversify within stocks, within industries. And I think all three of these options would be excellent if you're like, hey, I want to kind of be in the food consumer industry. I think that's going to do well over the next 10, 20 years, which it probably is. But then also it might not, because RFK Jr. is coming in and he's probably going to blow the lid off of all of the food that we're eating. So who knows? Who knows? I don't really have a good answer. And then there's Sweet Green. Okay, Sweet Green and Kava. Those are both companies that I've been investing in. I've been in Kava since January. It's done very well for the people that we've put it in. They're like the healthy Chipotle, the Mediterranean Chipotle. So yeah, I am a big believer in diversifying that way. I believe that like three things I really think of whenever I try to invest other people's money. What industry are they in? Okay. Do they want to own, they work for AT&T. Do they want to own AT&T? Well, I always suggest that you should buy things that you are involved with. I definitely believe that. That's like a no-brainer. You're putting your money where your mouth is and where your actions are. So we can diversify that way, right? Between industries and just different markets and whatnot. But it doesn't get talked about enough, the food consumer industry. And it's had a great year. It's almost tripled this year. So that's just something to think about, guys, with your investing. That is my rant. That's what I do when I look at new companies. I rant literally out loud to myself. I look at their quarterly reports, their annual reports, their market forecast. What is their plan, not just for this year, but like, do they have a 3-5 year plan of where their money's going to go? Is it going to be invested back in? Are they going to reward shareholders? Are they going to expand, et cetera, et cetera? All things that are very important. And guys, that's it. I'm headed over to Buffalo Wild Wings to meet up a couple buddies. I'm going to Middle America Restaurant right now, Buffalo Wild Wings. Okay. I might invest in Buffalo Wild Wings. I don't know what I'm going to do. I'm going to see if their wings have changed. I haven't been there in many, many years. Okay, I'm done. I hope you guys learned something, and I hope you're excited. Okay, this is the time to be excited. Let's invest. Let's make some money. Let's change some generations. And remember, you might be planting a seed of which a tree you may never sit under, but somebody may, and somebody will. Right? But if you plant it, you might get to help people, the next generation of your family, which I think is beautiful. And it's a selfless act to do those things, right? You're not just investing for yourself, you're investing for your great-great-granddaughter. Anyways, all right, sentimental as that is, let's end it. I'm way over 15 minutes. As always, invest early, invest often. We'll see you guys next week.